Hello everyone, today we'll be studying a 12-point difference between banks and NBFCs. First point of difference, meaning bank is a government authorized financial intermediary that aims at providing banking services to the general public, whereas an NBFC is a company that provides banking services to people without holding a bank license. Second, regulated by. Banks are regulated by Banking Regulation Act 1949, whereas NBFCs are regulated under Companies Act 1956 and Companies Act 2013. Third, scope of business. Scope of business of the bank is limited by Section 16 Clause 1 of the BR Act, whereas there is no bar on NBFCs carrying activity other than financial activities. Fourth point, need of license. License norms are tightly controlled and generally it is perceived to be quite difficult to get a license for a bank, whereas for NBFCs it is comparatively much easier to get a registered as an NBFC. Fifth point, demand deposit. Demand deposits are accepted in banks, whereas in NBFCs demand deposits are not accepted. Sixth point, foreign investment. In banks, foreign investment is allowed up to 74% for private sector banks, whereas in NBFCs 100% is allowed. Transaction services. In banks, transaction services are provided by banks. For NBFCs, transaction services are not provided. Eighth point, credit creation. Banks create credit creation, whereas NBFCs do not create credit creation. Ninth point, payment and settlement system. It is an integral part of a system for banks, whereas for NBFCs, it is not a part. 10th point, maintenance of reserve ratio. For banks, it is compulsory. For NBFCs, it is not required. 11th point, deposit insurance facility. For banks, it is available. For NBFCs, not available. 12th point, examples. HDFC, Kotak, ICICI are some examples of banks, whereas Bajaj Finance Limited, Muthoot Finance Limited, Mahindra and Mahindra Financial Services Limited are examples of NBFCs.